Welcome to the Gamma Brief. I'm Alex. If this is your first time here, this project is an experiment. I use a custom AI pipeline to scrape and synthesize market structure and macro data into clear, actionable daily briefings. Before we map the battlefield, remember this is market intel, not financial advice. Let's dive in. Tuesday, April 14th, 7 a.m. Eastern, ES futures are trading at 6,930. Muted VIX is masking a highly fragile regime boundary. Yesterday, the S&P rallied through geopolitical headwinds on the back of tech strength, and our call for a range-bound session played out perfectly, with both the 6,800 put wall and the 7,000 call wall holding to the tick. If ES holds the overnight gap, positive gamma dampens the tape. If it fades, the buffer to our structural floor shrinks rapidly. We are in day 2 of a positive gamma regime with a net magnitude of positive $13.7 billion. VIX is dropping notably overnight to 18.4 while ES futures are muted. This indicates event risk premium is bleeding out early. In positive gamma, dealers are net long options. They will sell into rallies and buy into dips, dampening volatility and supporting mean reverting price action. However, the regime is borderline. The GEX flip level sits at 6,900 with a flip proximity of just 13.8 points based on the cash close. We are operating near the gamma flip. The regime is transitional. If price falls below 6,900, dealer behavior inverts completely. Looking at the critical pivots, the put wall is at 6,800 and the call wall is at 7,000. ES futures at 6,930 have already cleared both R1 at 6,839 and R2 at 6,861. These are reclaimed levels below the price, leaving the call wall as the only remaining upside resistance. The 80-point expected move reaches up to 7,010, mathematically projecting a test of the 7,000 call wall today. ES futures are approximately 130 points above the put wall. SPX closed at 6,886, 86 points above it. If the gap fades, the buffer shrinks to 86 points. On the upside, ES futures are about 70 points below the call wall, whereas the SPX closed 114 points below it. Overnight, markets digested headlines regarding potential US-Iran peace talks alongside naval blockade risks. This binary news flow has kept oil elevated above $103 a barrel while silver dropped, reinforcing the rotational, tech-led dispersion we saw yesterday. On the risk radar today, we have the PPI data block at 8:30 a.m. Eastern. A hotter than expected PPI print could trigger a gap fade toward our flip level, while a cool print confirms a positive gamma range. We also have a gauntlet of Fed speakers starting at 12:15 p.m. Eastern with Goolsbee, followed by Barr, Barkin, and Collins. Strategically, the primary plan favors income and neutral structures as long as the price holds above the 6,900 trigger, relying on dealer hedging to suppress breakouts. The alternative plan engages if price breaches 6,900. At that point, the regime shifts to negative gamma and traders must abandon mean reversion strategies in favor of directional convexity. The bias favors mean reversion chop as long as we hold above the 6,900 trigger. A break below that level transitions the market into an environment where volatility is amplified. The regime is at a knife's edge. A 20-point move rewrites the dealer playbook. Level set, bias defined, good luck out there. If this daily breakdown gives you an edge, hit that like button and make sure you're subscribed so you don't miss a session. Standard disclaimer remains. This is market intelligence, strictly not financial advice. Options are high risk. Manage your size and trade your own plan. I'll see you on the next one.